she ended up with a huge tax bill to New York State when she didn't have to. Another story for you, and this is a crazy story, but I would love to get it out there. I have an Italian lady who built up a very successful business here, and she's got businesses in 7 different countries here in Europe. And then she decided to go and expand and go into the United States. And so she went to New York and she decided she was going to do business in New York
Yes.
instead of a business in New York. And I said, okay, that's fantastic. And this is what you need to do, et cetera, and put her in touch with an accounting firm and all the rest of the stuff. But when it came down to doing her US tax return, she had all of these companies abroad, which were controlled foreign corporations because she was the majority shareholder. She was not subject, well, she was subject to the US GILTI tax at the corporate level, at the federal level, and she was able to get a deduction, take
Yeah.
certain federal deductions to minimize her exposure to this GILTI tax. But New York State doesn't allow the same deductions. Does not allow the same deductions. So she ended up with a huge tax bill to New York State when she didn't have to.
So similar to Switzerland, we've got 26 cantons and you've got
50 states.
50 states. So
But each state has different laws. For any foreign national who's going into the United States, you really do have to get advice
yeah,
prior to going into the United States. So
yes.
that's a big issue.